Hi there, I'm Dean Heskin, President and CEO of Swiss America Trading. Thank you for tuning in to this most recent episode of our podcast, The Secret War on Cash. And it is quite a war that we do have going on in cash right now. Joining me today is our regular guest, Chris Agelastos. Chris, thanks for being here.
Yeah, thank you. Good to see you.
Well, nice to be seen, as the old saying goes. Today, we're going to talk on a topic we've covered before, but not as much as some of the other things like the banking crisis that's taking place right now, or some of the Wall Street worries that have been quickly growing, or the somewhat meteoric interest that's been taking place as it relates to BRICS. I mean, the formation of BRICS and the growth there has been nothing short of crazy. But today we're going to talk about gold. And in the 30 plus years that I've been in this business, it has always somewhat fascinated me how many people have little to no experience when it comes to owning gold. And I get the fact it doesn't fit the traditional mold of how people invest or save money for the future. But you're talking about an asset class that has maintained a universal trading value since day one that man or woman started pulling this stuff out of the ground. And the article on your screen, or the link for those of you listening, is yet another article pointing out the fact that central banks continue to break records when it comes to buying gold. And for those of you tuning in who have been following the central banks and their explanation as to why they're doing this, you've seen they're doing it for the same reasons really that we all should be doing it. Concerns about the dollar, overvalued real estate markets, a stock market that's getting ready to burst in the wrong direction, et cetera, et cetera. With all this buying of gold that's taking place, and it's not just the central banks, why do you think more people haven't looked at this and aren't doing the same things for themselves, Chris?
Yeah, well, I mean, there's a few reasons. Obviously, a lot of us are living busy lives, right? So it's, take the kids to school and race to the office and get done as much as you can and get dinner ready and all of that. So I think to some extent, a lot of people just aren't paying attention, and maybe the ones that are watching the news, the business news, it's probably traditional networks, and maybe Fox Business or CNBC. And of course, what are they talking about? The stock market, right? And tech stocks and pharmaceutical companies and all of that excitement. But they really don't, touch on gold much. So I think because of that, it's just new to a lot of people. Again, even though, like you said, right, it's been around thousands of years as money. To most of us walking around today, unless we've been paying attention, it's somewhat new. And I talk to people a lot, clients a lot on the phone. And I've learned that just most people, they don't make changes unless they understand something. So unless they're really, going out of their way to talk with a company like us and get some guidance, they don't understand it. So they go with the flow and maybe invest in their 401k, which is traditionally just going to be mutual funds or stocks. But I think what a lot of people don't realize is that, in the stock market, it's nothing to, I shouldn't say nothing, but I mean, how many times have we all heard of a stock, falling by 40, 50% in value, overnight or maybe over the course of a week? I think what most people don't realize is that, if you lose half your money in a stock, let's say, or a fund, it takes 100% gain just to get back to even. And that's a losing battle. And, gold is much more stable. If gold moves 5 or 10%, you're probably going to hear about it on the news. But because of that lack of volatility, you also don't have to have crazy gains in order to make good, consistent money and safeguard your finances. So again, I think mostly it's just a lack of understanding. Once they talk to someone, once I typically walk through the basics with people, the majority of them, at the very least, want to get some gold in their portfolio.
Well, I mean, that's great to hear, and I think it's something that's critically important. And another thing, as I was looking at that article about central banks buying, that I really wanted to point out to people, it references the fact they're buying it by the tonnage, number one, but
Yeah.
second to that, I think it's very important to make the distinction. We're not talking about the central banks buying mining shares or ETFs or
Right.
some form of a paper representation of gold. They are actually buying the physical metal. And the reason
Yeah.
I think that's very important is that, look, we hear a lot about what's going on with our debt, the dollar, the threat that BRICS presents to it. And some people even saying that the dollar as we know it may not even be here in a few years from now. The key with physical gold is it's an unencumbered asset. There's no debt tied to it. The value is based on what it is as it sits in front of you. And the strength of it, unlike, for instance, as you were mentioning, like, for instance, a stock, stocks have a value as they're traded on whatever exchange it might be. Let's just say the Dow on the New York Stock Exchange. But if that exchange is no longer trading, something similar we saw with a tragedy during 9/11, you can't get your value out of it. Whereas gold, as
Right.
we are doing this podcast today, it is universally trading in every currency throughout the world. It has the support of every currency throughout the world. And that's what makes it the asset of choice, especially during times of difficulty. So interesting to see this, and something we'll continue to watch. And over the years, I've also heard people say they don't like gold because it doesn't perform like other assets. Now, again, I've been in this business now for a little over 30 years. I heard this during the dot-com craze, which we all know how that ended. Also heard it during the big run-up in real estate in the early 2000s. Bad result there as well. Meanwhile, for the last several years, gold has been literally one of the number one performing asset classes. Now, some people might be saying that's old news, and they'd be right. So let's talk about right now and tomorrow. You'll see on your screen or through the link on the podcast, if you're listening to us, an article that's saying gold prices will hit as much as $3,000 an ounce in 2024. Now, if you compare that to the $2,000 price that it's currently trading at, that's a pretty substantial move. So, Chris, tell us a little more about why they're predicting this kind of move.
Well, I think one thing that maybe everybody doesn't realize is that gold typically thrives when other asset classes are failing or doing badly. Doesn't mean it won't have consistent growth, during that time period, but those things really help to set it apart. And right now, I think we know that the dollar has been struggling, but compared to other currencies, it's actually held up okay up to this point. And the stock market is keeping it together. And then on top of that, interest rates have been climbing, so it's good for savers, right? They're getting decent returns finally on CDs and savings accounts. So, but despite all of those, I don't want to say positive, but everything kind of keeping its holding its weight together. Gold has gone up 21%, a little over actually, in the last year. So. Really, it's pretty simple math. If gold is growing as much as it has, even though all the wheels have not fallen off the wagon yet, and you have a lot of people predicting a recession in 2024, a stock market crash, or at the very least a bear market, those are things that will really push the price. So to see it going from 2,000 to 3,000, while it sounds like a big jump, and it is, given all the current market factors, it's very realistic.
Yeah, and it's looking the factors that in this article that discuss why it's going to make that type of a move. All their factors we're unfortunately all too familiar with. We each and every one of us are watching this kind of unravel right before our eyes. And in so much we're talking about gold today, one of the things I wanted to be sure to kind of highlight or point out related to gold, for those of you tuning in who have never been involved in gold, you can contact our office, talk to one of our representatives. You'll see our toll-free number on the screen at 1-800-289-2646, or visit us online at www.swissamerica.com. Call in, find out a little bit more about gold. Another thing that, again, I wanted to highlight is many people have been taking advantage of the ability and opportunity to take some of their retirement savings and actually put that into gold. Monies that you may not need today, but you want them there for you tomorrow. It's been a very, very valuable tool and asset for people to position some of those funds there. So, Chris, I thank you for all that information. Thanks for joining us yet again for another episode of this Secret War on Cash. For those of you tuning in, please feel free to comment. We'd love to hear from you. If you'd like to hear more episodes like this, please subscribe to our podcast. And lastly, follow us, as I always say, on social media, because we'd love to stay plugged into you as well. So thank you for those tuning in. Chris, thanks again. We look forward to having you at another time in the future. We can talk about more exciting, fun stuff like this. This is Dean Heskin. It's been Chris Agelastos as well. Thanks for tuning in. Love to see you next time.